Good afternoon, everyone. This is Chrisi from SolsticeATR and Balkan Capital Research. Today, what I'm going to do is basically change the format and do something very basic and understanding for everyone from a basic trader to a professional trader. Talk about gaps, talk about channels, flags, triangles, and wedges. The reason why whenever we have a breakup or a breakdown in a move in the market, we are able to recognize it, and it usually repeats itself. The cycles do repeat itself, and understand that the market direction of those moves. So let's begin by just taking the SPX first, and I'll go to equities and we'll break it down from there. SPX. That's the Fortune 500 company. And what I'm going to do, instead of the weekly, I'm going to go to the daily chart first of all. And from the daily chart, what I'm going to do is zoom in just to show you an area so you guys can understand what I'm trying to explain to you guys. Let's take this area from here to down here, which is, from February of this year till basically July of this year. And what I want to talk about is basically understanding where there is a gap and where there isn't a gap, if we are in an up channel, a down channel, and a side market. First of all, if you notice when we were coming up, we had a gap here between this area and this area. That's a gap between the candle. That's what you call a professional gap, or some event or news moved this candle higher. And like here, it shows it more clearly. You can see it here in April 1st. After March, we had a gap up and continue higher. When we came back down this way in May of this year, June, we had a gap down probably on news or an event about the tariff, Iran sanctions, Federal Reserve Board changing the direction of interest rates. So there's always an event that will cause either a gap up or a gap down on news to push it above or below, and that's what we call a gap. And what I usually do mark it with an oval so you know where the gap is, and like this one here, we mark it with an oval so that way you understand it. So this is the first thing I covered, which are gaps. And this is something that you can do whenever they are revisited. They no longer valid, so they are done. On the way down, we came back up, filled this gap, and continued higher. Where do we have a gap? We have one right here. So these gaps are already no longer valid. So the only valid gap is right here. We have one right here, so you guys can see it. That's when we pushed higher. We have another one right here in the candles between the Wednesday, Thursday, Friday, and I'm going to mark it. It's a very small little gap. This is very important. This gap on the daily chart, if we end up changing direction, we will break down unless it holds. So this is how you look at a gap, and there's one right here. When we came back, retested it, went lower, came to this area where we broke out of the 29, 64, 65 and reversed and went higher. If the market's going to continue higher over the weekend, if nothing happens, an event happens overseas between China, Australia, Europe, it is continuation to the upside, because remember, I had told everybody we're looking for the 3030, 3028, 3040, and we marked it with a little highlighted area here on the combination of those instruments. But what I'd like to do, since now you understand what are gaps, this is what are gaps. Second thing, if we are coming in a downtrend, we can draw a channel to the downside, and you will understand that the downside, this is a channel from the high to low. Oops, this is the wrong one. You grab this, the high here, and you connect it to here, and this is the first breakout on the way up when we continued higher. So this was no longer valid, it's no longer there. You can remove the drawing. but I'm just showing you how to draw a channel up or channel down for a breakout. If you notice, we are in an uptrend here. We had this prior high, this prior high, this prior high, and eventually we broke up. Inside this channel, we are uptrending, but at the same time, in the middle of these two ranges, we have an up channel connecting those dots, or you can connect the nearest high, like from here to this one. And if you noticed on Friday, we missed it by a hair and basically closed at the high. If this is going to continue, it's going to go higher, and we can grab another one from the bottom. And this is what we call an up channel wedge. Like when it's a cone, it's an up wedge. If we break down beside, if we break above, it's gap and go. If it breaks below the wedge, the lower wedge, this is a channel, it's heading back down to a prior support. Okay, and on the way up, if this breaks out, remember we have a longer time frame channel. Remember this channel? We have this little smaller one, and we have the longer time frame. If we go to the weekly, you can see this long time frame channel that I've drew from 2-3 years ago. This is the tops. You see it? We are barely touching it. Let's zoom in from here. And this is an up channel. Is it going to act as support or resistance, or act as a breakout? If this breaks out, look for the upside of this channel to meet the top. If it doesn't, it comes back in and breaks this down channel. We look lower to the bottom of the other side of the channel and to fill the gaps on the daily charts or the weekly chart or the monthly chart. This is how we look at things to understand a gap, to understand a channel, to understand the flags. If you noticed on the way up, I'm going to remove this. We'll keep that one. We'll keep that one. We'll keep that one because on the hourly, it's going to change the dimensions of it. If this gap does not hold and we come back down, where is my first support? The 18 SMA and the prior breakout in this area. If we continue higher, we look higher. If not, be careful. We are away from the 50 SMA on the daily. Let's call it 2900. We are at 3000. This is 100 points away from the high to low. Do we reset partially and continue back up, or do we go continue higher? Remember, all the events that happen in the market has nothing to do with news. They are built in the price of the trade. So we covered channels, we covered gaps, we haven't covered the flags. You see this one? This is another channel breakout, another channel down, which is a flag. This is what you call a flag. We'll just mark it like this. You see it? This is a flag, and this is a bottom wedge, and you break up. Then you do another one here, same thing on a shorter time frame. This is a wedge, and you break out again. I'll clean this chart up. So remember how to look at down channels, up channel, break up or break down of those channels. And this was a down channel. We'll do it again. So to show everybody. And there was one from here to here. You see it? It's a smaller wedge. When we came back up in this channel, we broke up and continued higher. Now we are in an upper channel continuing up. Let's go break everything up in equities, and I'll come back to the futures. AAPL. And AAPL is in a, if you notice from this high to this low, we have this fib. Every time we hit a high, we retrace to a specific 38 or 61% or 78, came back, retraced to it, and pushed higher. Let's zoom into this area to look at it as an overall. If we take this bottom to this previous high, this is the resistance. If we break this channel, and this channel, remember I put this oval, this is the target in Apple. If you notice, this is the first gap, this is the second gap which we cleared, and we're trying to come back up. If this is going to be continuing, we finished the 205 area, look for the upside of this channel. This channel is no longer valid because it is broken. Remove drawing. What I'd like to do, take the 190 to these prior lows. Be careful of that 18 SMA breaking down, then you head back to the 50. This fib is the 38.2, and if you hold and break out this one and break out the 205, you're looking for the upper channel here, and we have a wedge inside, and an up channel on Apple right here, if you can see it. Can you see that, everyone? So, or you can grab the nearest high, which is this one here. To the nearest high here, and this is a parallel channel wedging. If we break the 50, we continue to this side, and this is where my oval would be for the first target. What I'm going to do, remove it, and we're going to draw an oval on Apple. I hope this is helpful. I'm trying to show you a couple of them, how to do the setups and know what to look for. This is the oval for next week. If we fall through this channel, the target is your 50 fib, okay? So let's go to Amazon. Come on, Amazon. Okay, Amazon looks like it's gonna have, this is, let's consider this the top. This is the handle. If there's strength in the market and we can break above this area, the prior high, the 2050 area, look for continuation. Remember, I marked this the week before and I said this is the target. If we break up, we're gonna, clear this area, we're gonna look higher. So it pushed up, came back, and we had it on Friday, an inside day, and this is an inside candle on strength, got brought back a little bit in on Thursday. If this is going to continue, you're going to look up, we're going to draw a channel up, make sure you don't break it. If you lose it, look for the backside of this breakout, you see it, which is down here, this candle that took us up, and let's zoom in and look at it. So that's a good way to understand market and trends and channels. You can do a small channel here and a small channel here. It keeps you intact like a cone in the upside. Let's take a look at BABA, B-A-B-A. BABA's channeling between this channel and this channel down here. It's in a downtrend, if you can see it. It's parallel. You can grab a channel and do the same thing to it. In order for BABA to continue higher, it has to break out through the 50 Fibonacci fib, which is an old channel, to continue higher, and you have a channel here. Because if this is lost, you're in the side of a symmetrical triangle on BABA. You can see it, one here, one here. If you break down below here, you're going to look for the 61.8. If you break up the 50, you're going to look up to this channel to the backside of the resistance up here. So this is no longer valid because it's already broke it through a long time ago. Remove drawing. We'll keep this one here so you guys can recognize stuff. So this is BABA. Let's take a look at FB, Facebook. Facebook is basically, you can see it, this is a gap. It came down, looked up, and eventually broke that 198. And I had told everybody, if you break above here, look to continue high. And look what Friday it did. It hasn't reached the full gap potential from here to here. There's a partial gap to fill still from here, which is this candle here, okay, to this one here, right here, okay. This is why I marked this area here, the 210. If it cannot continue, look to the backside of breakdown coming back to this channel. If not, continue to fill the gap. That's Facebook, Goldman Sachs. Let's take a look at Goldman Sachs. Goldman Sachs was in a similar situation. Remember, about a week, 2 weeks ago, I said keep an eye on the 210. If the 210 breaks and the 205 holds, look to continue higher. What did Thursday do? Break out. Friday continuation, came back, retested the close, and continued higher in an up channel. Let's take a look at Google. Google, similar to the other chart in Apple, but if you notice, those gaps eventually filled, and now you're in an uptrend in a down channel. We can do this if you guys like. And we can do that. This one we can remove it because it's too far away. Remove drawing. And keep an eye from this candle to this candle in the symmetrical triangle. If you lose this triangle, come back to the breakout of the bottom one, which is here. You can connect it to this one. It comes back to the 38.2. If this is going to break out and break the 116 in this channel, where's your gap? This candle here. You see it? Between here and here, there's a gap. So your target is the 65 to to the 75 area here. Or let's mark it with an oval. That's Google. Let's go to Netflix, NFLX. Netflix tried to go above that 180, 380 again, looked above Friday, failed. Keep an eye on the 18 simple moving average to hold it. If it doesn't, look for the 38.2 Fib, which is the 160, 365, to continue back up, or the 360 for a small bounce up, because it's been going side range bound for a while. If this is the cup, if this is the roundness, if you consider this a round bottom, let's just do this with an, they don't have a drawing tool. We can do this like an oval. Watch what I'm going to do. I'm going to show you guys how to look at it. This is the roundness of this cup, that bottom roundness. Then if you create a smaller round bottom here, like a cup, then this is continuation to the upside. Okay, everyone? So I would like to see Netflix hold and continue higher. Let's take a look at Tesla. Oops, sorry, TSLA. Okay, Tesla. It was in a down channel. Remember, everybody, I said be careful of Tesla clearing the 200 and 185, 200 area, 190. You had this little push up. It never came back here. It's getting that rounded bottom. It's baselining, trying to break up. If it breaks up this area, where was the first target? I said the 116 SMA. I still have it in line. What I'm going to do in Tesla, just draw an up channel to see if it holds it. If it does not, look for the 38.2, then try to buy back Tesla to the upside. If it's continuation and you're not in it, basically you have lost the 241, which you never got back in. You never got back in at the 228. Remember, I said I marked this area. If it holds, comes back in this area and continues higher, what did it do on Tuesday? Come down, retest the backside, missed it by a little bit, touched the 18 simple moving average. Let's zoom in, and bounced higher. If you notice, missed it. You turned Wednesday gap up, Thursday inside day, closed in the same area, and Friday continuation to the upside in Tesla. If this is going to clear this area here, our target is the 116 SMA and the consolidation of those three candles. Let's take a look at SHOP, because I know some friends were trading SHOP to the short side last week. SHOP has created that down move, came back up, moved down, picked itself up. It's underneath the 18 SMA. If the 18 in this area doesn't clear 315, it's going to be having a hard time to continue to the upside. If it falls through the 310, look for the backside of the 300 and eventually hit the 50 SMA and see if you can get a bounce there. If not, the best trade around the 260, 265 for a better buy position in Shopify. Let's take a look at Wynn Resort. Oh wow, what just happened here? Okay, Wynn is baselining. It's got an island. If you notice, between this candle and this candle, there's a little gap. If it wants to clear, it has to clear the 135 area, 50 to continue higher to the upside of this channel, or this one that the computer grabbed, because this is no longer valid. We remove the drawing and we'll draw it from here to this one here, and that would be the up target up here. So we can mark it with an oval. If you fail the channel, look for the 18 SMA to purchase Wynn. If it breaks out, look for this target. If it breaks down, look for the 18 and the 116 SMA to buy back. Let's take a look at ExxonMobil, and we'll go to the futures. ExxonMobil has formed this little head and shoulder. This is the base. This is the head. This is the shoulder. If this is a double shoulder, does it clear the 178 to continue to this upside, or does it fail the 18 SMA for a rebound from Wednesday to continue high because you have this up channel on Exxon. Let's take a look at the instruments, the ES, the E-mini contract, and I'll go do the SPY. The S&P 500 is in a similar situation as the SPX or the SPY. It's in this upper and lower channel. It's got that wedge. It's trying to break up. What we're going to do is grab this nearest one. Oops, whoa, I didn't, sorry guys. This is the channel. We grab this channel here to this one here. We'll hold it. If it stays above this 296, 29.96, it's still bullish. If it's underneath this area and it falls through, look for this oval right here first before you do anything, and that's the professional gap at 29.55 and a quarter because we never filled it. We're going to remove this one and we're going to move it over to the right. Let's do an oval like we usually do. This is the gap. I'm going to mark it there, and you have it right here. And you got the breakout of the prior high from here. This was a look above, came back in, look above. We should draw a Fibonacci from here to here right now, but I'm going to leave it alone. This one will stay. This channel will have to be readjusted. And we'll keep an eye on this channel if it's going to hold to continue higher. If it loses it, then we have no continuation, okay? Let's take a look at the SPY. It's in a similar situation. Keep an eye on this gap. If not, the professional gap is in this area on the oval, and we'll push it right over this way. And this one, you have to keep this up. Do not lose this area, the 297.50 area. Do not lose it, or it's going to become bearish to the opposite side, everybody, or the 98, which is this area, 298.70, okay? Let's take a look at the NQ, the NASDAQ. Okay, come on. The NASDAQ got it to its target. If you notice, I have this channel here. We had this first oval in the gap, continued higher. You formed a little cut, you formed the handle, and you pushed higher. Does it continue to the upside or eventually fail? Keep an eye on that double top here. If that 8,000 is mental on the NASDAQ, or does it get above 8,000 to come back in? Let's take a look at the YM, the Dow Jones Industrial, or the QQQ. I'll show you the QQQ before I'll go. QQQ. QQQ is in the same thing. Keep an eye on this gap, and what we'll do, we'll mark it with an oval. There it is. Make sure you hold this. If not, the backside of this channel, if there's continuation or not. It's a new high for the year. Or the highest high we've ever had. Let's take a look at the YM, the Dow. Dow Jones Industrial Average, it did what I expected it to do, and this is my oval, which I had as resistance. We're going to draw one more channel. We're going to grab here to continue higher. Okay, let's get a channel first. And this is the channel it needs to hold. You can do this one, which is a little wider, or you can do that one, which is a little bit more lower. You see it? So my concern, I made a little bit wider, so that way it keeps you intact. Do not lose the 26,800, or keep an eye on the 26,950. It doesn't lose it because it won't continue higher. This is the annual high. We eventually broke through it. And we had Thursday very strong push in the Dow Jones Industrial Average, and Friday. Whoops. So the Dow is doing much, much better and stronger than the NASDAQ as well as the S&P. And let's take a look at the RTY. RTY is the small cap. Russell has been consolidating in this symmetrical triangle. It's been having a hard time clearing the 1600. If it's going to continue this oval, what I'm going to do, remove it and put it to the right. Okay? Get an oval. put it to the right. This is the first area, and the second one would be the up target, which is the 1622. Remove one, put one here. Just keep an eye on it. And the downside, if you lose this channel, this gap, what we'll look for is the 38.2 Fib. And remember, the 18 SMA is holding it. If the Russell had a good day on Friday but couldn't clear the Wednesday high, you see it closed right inside the prior Thursday candle. The push up stayed strong. I do not want to see 1560 in it. I would like to see the Russell continue clear the 80, then clear the 85 to continue to the 90 and eventually to the 1600. If it loses it, look for the first 50 simple moving average, then the backside of the 1529, 1530. One more thing just I want to do. You can use volume profile as an instrument to understand where the market trend is, the market sector. And you can use, they call them, you can use monkey bars or volume profile. If you notice, this is each month high and low, the POC, value low, value high. But what I want to do is, instead of using a daily, what I'd like to use is a 15-minute 5 days. What it does, it basically gives me a better understanding where most value high and low and POC, when we push up and down. If you notice, we pushed down, came back up. The POCs are here. Most value was built here. POC, value high. POC, value low. And eventually we pushed higher, correct? It was building here. Where did we close? Right here. So this is the Russell. So let's take a look at the ES so you guys can see the difference. The ES, every time we pushed up, that was the close. Pushed up, that was the close. Pushed down, that was the close. Then on this is the open interest, and we pushed back up here. So most value is the shadow, value high, value low, and POC. Value high, value low, and the POC. That's what I usually look for to see when it's pushing up in the direction of the move, or it's pushing down in the direction of the move down. Is it inside value, or is it below value, or is it coming into inside value? Usually we traded inside day on Friday, which was very low volume. Remember, everybody's on vacation summer. They may be at the Hamptons, as far as I'm concerned. It's okay, but if you cannot trade inside of a squeeze, which we call compression, which is the Bollinger Catlett channels, you can look them up. When you're inside in consolidation, there's no movement much in the candles. Try not to trade until you get a breakup or a breakdown of the candles, and I'll show you how they look like. Push this, go standard, and we'll go to a 15-minute bar, and I'll show you how they look like when we're consolidating. This is a 15-minute. When we're pushing up, let's just zoom in from here. When we're pushing up, basically this is consolidation, breakup, consolidation, breakup, head back down. This is the overnight action. I'd like to use the overnight to give me if we had tested the lows or the highs, or where we tested the overnight high. And this is a breakout, come back, retest basically the overnight high in the Euro Asia zone, and push back high, come back in. We had a prior high. We had an inside day on Wednesday. Thursday we had an inside day, back and forth, couldn't break out the 3007, 3005. Eventually on Friday we consolidated. If you noticed, on Friday we didn't have much move until the afternoon into the close. We were ranged between 312. We had a professional gap. If you noticed, Friday's close at 3 p.m. or 3:15 was 305 the high. The close was 304 and a quarter. But in the overnight action, we had 302 quarter, and the high was 312.50, I believe, 312.75. Sorry, 75. 75. So we were inside the range. When we broke up the 12, we consolidated here. We went down, consolidated all day. There's no volume. They pushed it a little bit in the afternoon, and eventually before the close, 1 hour before the close, 45 minutes, we pushed high, broke the 12, continued higher, didn't get to the 30.30. We got to the, I was thinking, we can get to the range of 30.22. That was my target. If you notice, the high target was 30.26. We got to the 18, rejected, came back to where we broke at it, but we stayed above the 12.75 in the overnight. This is going to be a tell. If we break this channel, come back here, is this zone, the 3005, a buy, or is it the 96 where we can get, where we had the consolidation from 2 days ago, we hold and continue higher. So this is all from us here at Solstice ATR. I hope everybody enjoys it, and Vulcan Capital Research. If you like this video, please subscribe. It's free on weekly basis. If you'd like to join our chat room, you can check us out once again at the website, and we'd be more than happy to help you. We have an active trading room on daily basis, live, educational. At the same time, it gives in and out of trades, live trades, and you can watch our screen. We're not somebody that's out there telling you, come look what we did. I want you to be aware of it. We are a live trading room. We call the trades in, and we show where the entries and exits are, and if we are wrong. Hope to see you there. Take care and ciao.